Good morning and welcome to the Killik & Co market update. This week, the latest GDP data for the UK was published and it showed that our economy was in a recession at the end of last year. It's not a pleasant headline, but if we look at the data, we can see that it wasn't a particularly severe recession. A recession is defined as 2 consecutive quarters of falling GDP or falling economic output. Here's our quarterly GDP since the start of 2019, and you can see that big drop during lockdown when so many people weren't able to spend or work, and that was followed by a big recovery afterwards. Looking at the more recent data, you can see that the economy shrank 0.1% and 0.3% in the final 2 quarters of 2023, and these declines are so small that you can't even see them on the chart. It's now thought that there's a 70% chance that interest rates in the UK will come down before June, and that should be helpful for future economic growth. There's been quite a lot of talk about NATO this week, and in particular how much the member countries are spending on defence. NATO members are supposed to spend 2% of their annual GDP on defence, but in reality, a lot of them have spent a lot less than this for much of the past decade. This week, Donald Trump suggested that the US would no longer protect NATO members who are not spending that 2%, and he even caused outrage by suggesting he might encourage Russia to attack those countries that are underspending. Here's what some NATO members have been spending during the last decade. The US is right at the top there in the dark purple, spending around 3.5% of its GDP per year. The UK is in the lighter purple and it has generally been just above that 2% level. Germany in the pink has attracted particularly heavy criticism. Its spending has barely been above 1% for many of these years. However, it has increased recently and Germany has said it will meet that 2% target for 2024. Poland and Finland in the black and the blue have dramatically increased their spending following Russia's invasion of Ukraine. Yesterday, Ursula von der Leyen, who's the president of the European Commission, has called for subsidies on European defence companies to help them increase production. On a related note, we did have results from Airbus this week. Airbus is best known for making commercial aircraft, but it is also involved in defence, and about 20% of its revenues come from its defence division. As you can see on this chart, the size of the order book for its defence division has been rising, up from 36 billion euros in 2021 to over 42 billion euros in 2023. And in fact, Airbus has just announced it will be paying a special dividend this year. And finally this week, there's been a bit of a change in the rankings in the list of the world's biggest companies. Here's the latest list. Microsoft is still at the top there with a market capitalization of over $3 trillion. Then we've got Apple, and then in third place we now have Nvidia, which has experienced a strong rise in its share price over the last few weeks, and it's overtaken both Alphabet and Amazon this week. Some investors will use the price to earnings ratio to determine how expensive or how highly valued a share is. This ratio divides a company's share price by its earnings or its profits. But some would argue that companies that are growing more quickly should be more expensive, and therefore they might look at the PEG ratio, which divides the company's price to earnings ratio by its rate of growth. On this list, you can see that Nvidia has the highest price to earnings ratio, but the lowest PEG ratio. Those who have been holding Nvidia for quite some time might wish to review the size of their holdings in the context of their overall portfolios. As an example, if you invested 3% of your portfolio in Nvidia in 2022, it could now well be worth over 10% of your portfolio, and arguably that would be quite a lot of eggs to have in the same basket. Nvidia's results are due out on Wednesday next week, and there is quite a lot of excitement about them. Moving on to look at other companies reporting next week, it's quite a big one for UK banks, and we're expecting results out from Barclays, HSBC, Lloyds and Standard Chartered. That's it from us. Have a great weekend, and we'll see you next Friday.